I'm going to do a quick video on the current strategies for those that are want to follow them. Um, my suggestion has been because we are potentially in a bubble phase here that you could have, if you're worried about the plunge protection team stepping in, maybe stopping an ICL abruptly, prematurely, and then we're kind of left in no man's land. We don't know whether we should leverage up or not. Um, my suggestion: have a partial, not a full, a partial position. So if let's say if you're going to split your portfolio 50% metals, 50% stocks, maybe at most have 25% in an unleveraged position. So that means my um, choice of ETFs would be either QQQ or SOXX, that's the semis, or half and half of each. It has to be unleveraged. We cannot take a leveraged trade until we are sure and confirmed that we've got a final ICL. So we've got a bit of a problem here. This potentially could be a daily cycle low that topped on day 3. The problem is it didn't rally long enough to turn the 10-day moving average back up. So there's no real confirmation that this is a final daily cycle low. And then that poses another problem. If that's not the daily cycle low, then we've got a really, really long daily cycle in progress here. And there is a possibility that when this daily cycle bottoms, that gives us our intermediate cycle low, and then off we go to the races again. So my suggestion, again, just have a partial position. If the correct count is that this is a really long daily cycle, and at some point here soon, I mean we're like 60 days into this, at some point soon here we're gonna get a final bottom, and that'll be our intermediate cycle low, and then off we go. Then you're going to at least have a partial position. You'll have your insurance, so to speak. So you will ride the next wave up, and don't get laser focused on the fact that we're going down right now. There's going to be an advancing phase to a new intermediate cycle at some point. When we were coming down here, no one could envision this explosive rally. So the same thing is probably going to happen. I don't know where this is going to bottom. I'm really not sure if this is, a left translated fourth daily cycle that just didn't turn the 10-day moving average back up. Can't tell for sure if this is just one really long daily cycle that when it bottoms is going to give us our intermediate cycle low. But I am pretty sure that when we get that intermediate cycle low, we're going to have another explosive rally, and we're probably going to go to new highs again. So don't get focused on what is happening immediately at this moment. Have a little foresight. Understand that all of these ICLs end. There's always an advancing phase to a next intermediate cycle, and there is a strong possibility that we are um, starting or even halfway through a bubble phase. So let me convert over to the NASDAQ. And you can see it really well here in the NASDAQ. We've just, broken out, and this just has the look of, a final parabolic bubble phase. So I think it's probably a pretty good idea for most of you anyway to have at least some insurance in case this were to bottom, tomorrow or next week or something. If this bottoms and takes off, and we can't really determine whether or not that was a final ICL, at least you'll have a position, and you'll be able to ride that position up during the advancing phase of the next intermediate cycle. And then at some point we'll if we break out to new highs, obviously that's a new intermediate cycle. At that point, you could add in the rest of that 25% position. Maybe if we were to break out to new highs, we could rationalize that now we're early in a new intermediate cycle. We could add some leverage, And if not, if this continues down and it becomes clear that we are getting a real and a true intermediate cycle low, maybe it bottoms, end of October, beginning of November before the elections, then what we will do is at that point we will take that partial unleveraged position, the QQQ and the TQQQ, or the SOXX, and we'll convert it to TQQQ and SOXL leveraged positions, and then we'll add in that other 25% or however much cash you've got left. We'll add that in as well, once as close to the intermediate cycle low as we can, and then we will ride the advancing phase of the next intermediate cycle in leverage. So we're going to go down unleveraged in a partial position. If we can get something recognizable as an ICL, we'll convert, and then we'll ride up in a leveraged position with full positions. So that's how the strategy works, and it's the same strategy for metals. All right, now, so let me start off and say that I'm much more confident that we're going to get something that truly looks like an ICL in the metals market than I am in stocks. I'm worried that the plunge protection team will come in and stop the ICL prematurely in the stock market. So that's the one where I would be more apt to have that insurance. But you can do it. You can use the same strategy with metals, and we've already, even if this were to bottom again, I think we're loading the slingshot, so I think it's going to have to break below 1800. But even if it does, this qualifies right now. We already qualify as this is a true ICL in progress. So I don't necessarily think you have to have the insurance in metals. I think we're going to be able to spot an ICL in the metals, and then we can take our leverage positions at that point. I'm just not as confident that that's going to happen in the stock market. So that's why I would suggest having a partial position in unleveraged trades, QQQ or SOXX or both, in the stock market, and then we will convert those if we can get a recognizable ICL. Metals, I don't think you have to have the insurance. We are clearly moving down into an intermediate cycle low, and I think at some point here we're going to get a clearly recognizable bloodbath phase. This is not a bloodbath phase here. If it was, it would be day one, because we just broke this support zone right here, so this would only be day one. But this is not a bloodbath phase. This doesn't qualify at all in my thinking. I think we're going to get it once 1800 breaks, and I think it will. At that point, I think we're going to get that 5 to 7 day complete all-out panic, and we might even drop another $100 in that 5 to 7 days if we break 1800, and then that would give us our final ICL, and that's where we will start adding some leverage to our metal trades. But for those of you that don't understand the strategy, especially in the stock market, just all we're doing is we've just got some insurance just in case the plunge protection team stops the intermediate decline and pumps the market back up ahead of the elections. We don't want to get left behind. I do believe the bubble in stocks will come before a bubble in gold. So I think it's a little bit risky to have no position at all in the stock market. And we've got a very good plan on how to profit from that. We're not going to profit immediately, but by this time next year, you will have more money in your account. And if we do get a bottom and just turn around and get kind of a fake out, then at least we'll still have a position, and then we can figure out how we got to get the rest of that position in play. This is the weekly chart here. So, like I said, we could make a case that we've kind of got almost all the requirements met for an ICL already, although I really like to see at least 38% of the rally retraced, which is going to be back down here at 30, 50 before I try and call an ICL. But if we're in a bubble, that may not happen. So we're already down 4 weeks in a row. That's not out of the question as being, we could complete an ICL with 4 down weeks, and it won't take much more to turn this 10-week moving average down, at least marginally. So we meet that requirement too. We broke the intermediate trend line a long time ago. So it is entirely possible that we're seeing just a really stretched third daily cycle, and that the ICL is going to complete when that third daily cycle bottoms, and it could bottom as early as next week. So this is the rationale for having at least a little bit of insurance in the stock market.